Anuradha, we can start now.
Okay, ma'am. Good evening, everyone. First of all, I like to thank everyone for finding time and visiting today's webinar. My name is Anuradha from Department of Corporate Secretaryship from Mahalakshmi Women's College of Arts and Science. Today's webinar is organized by the Department of Corporate Secretaryship. The topic is how to learn and earn in capital market in current scenario. May I invite everyone to invoke the Almighty. Prayer song.
ஐந்து கரத்தனை ஆனை முகத்தனை இளம் பிறை பாலும் ஏற்றனை மகத்தனை ஞான கொழுந்தினை வைத்து அடி போற்றுகின்றேனே. நமஸ்தே सुरपूजिते शङ्खचक्रगदाहस्ते महालक्ष्मी नमोस्तुते नमस्ते गरुडारूढे ओलासुरभयङ्करी सर्वपापहरे देवी महालक्ष्मी सर्वज्ञे सर्ववरे सर्वदोषभयङ्करी सर्वदुःखहरे देवी महालक्ष्मी नमोस्तुते सिद्धिबुद्धिप्रदे देवी मुक्तिप्रदायिनी मंत्रमूर्ते सदा देवी महालक्ष्मी
Now I invite J.Y. Monisha from the Department of Corporate Secretaryship from Mahalakshmi Women's College of Arts and Science for welcome speech.
Very happy morning to everyone. I am J.Y. Monisha from BCom Corporate Secretaryship, second year. We are happy to inform that our department is organizing a national level webinar. The warm welcome to our management, respectable chairman through S. Munjidabadam sir, fearless and forgetful through S.K. Kumaran sir and through C.V. Harikrishnan sir. Bridge builder of our college, Principal Dr. N. Bhuma ma'am. Respectable Vice Principal, Mr. S. Ramasamy sir. My pleasure. It's a great honor to welcome our resource person, Mr. S. Ramasamy sir.
Unmute your mic.
Very happy morning to everyone. I'm J.Y. from BCom Corporate Secretaryship. We are happy to inform our department is organizing a national level webinar. The warm welcome to our management, respectable chairman through S. Munjidabadam sir, fearless and forgetful through S.K. Kumaran sir, and through C.V. Harikrishnan sir. Bridge builder of our college, Principal Dr. N. Bhuma ma'am, respectable Vice Principal, Mr. S. Ramasamy sir. My pleasure. It's a great honor to welcome our resource person, Mr. K. Annamalai sir. Once again, I welcome our department HOD staffs and our Mahalakshmians. Thank you, sir.
Thank you, ma'am.
Thank you, Monisha. It's a great pleasure for me to introduce our speaker today, Mr. K. Annamalai, sir. The profession was started in the year 1990 as the proprietary concern and converted into private limited as Annamalai Capital
Your voice is very
Services
low.
Private Limited. Yes, sir. The profession was started in the year 1990 as the proprietary concern and converted into private limited as Annamalai Capital Services Private Limited. Also established skill-based financial training center, ACS Capital Market Academy, associated with NSE and BSE to provide on hand training and practical oriented application of knowledge in financial market, and a resource person for many business schools, universities, member of board of studies for many autonomous colleges, and entered an MOU with many colleges for providing practical aspect of financial market. Thank you.
Thank you, ma'am.
Now I invite our speaker, resource person, to take the session.
Thank you, ma'am, for your nice introduction. Thank you for everyone. Good evening, friends. I really it's wondering and how we are, even though sitting at 450 kilometers away, we could be able to interact. My audible is clear? Hello?
Yes.
Audio is clear? Are
Yes,
you able
sir.
to hear?
Yes, sir. Yes, sir.
Okay, good. Thank you.
Yes.
It's my pleasure to be with you in this happy evening and to just share the experience
Yes.
how to learn the capital market and also how you earn in this market. Friends,
Yes, sir.
all of you agree that you're all working hard to earn money, right? Any doubt? No doubt. Every one of us working hard to earn money. And we are all learning now. We are all studying graduation, post-graduation, to go for an employment or to become an entrepreneur. Ultimately, everybody's goal to earn money because money is more important to maintain our life and have our life more comfortable. I don't think that any difference of opinion on this issue. Every one of us working hard to earn money, friends. Okay. How to earn money? That is more interesting question to answer. First, how to earn money? Where to earn money? That is a question to be understood. We have various avenues of investment opportunities to earn money. I am not going into those areas of basic, the investment strategy or where to invest, what are the avenues of investment and all these things. I am not going into that area because our today focus is that how to earn money in the capital market. That is what most important focus today. In another 1 hour, we are going to focus and we will learn ourselves how to earn money in the market. How many of you interested to earn money even now while studying itself? Okay, you send me a SMS or a mail to me that how many of you I'll make you to earn money. And also how much you would like to earn. Per day 1 lakh rupees, per day 5 lakh rupees, still possible. Yes, you can do that. That is the capital market. No other market other than this capital market gives you so much opportunities to make money. But many of them have not understood the right way the capital market. That is the issue. Once we understand the market, once we know the risk profile of the market, we can very well make any amount of money. Even I can say tons of money you can make in this market. But before how to make money, now we need to understand what is the capital market. That is what more important. Because many of us, we fail in certain things because we venture or we do something without understanding the basic concept of the area where we are working. So whatever we do, whatever the venture we do that, we need to first understand what we are doing. So before I going into how to make money in the market, I would like to brief you. I would like to take you slowly to make you understand what is the structure of the Indian financial system, particularly the capital market. I give you brief about what is capital market, then only you will understand how to make money in the capital market and how we can expertise in this market. So I will just slowly explain to you the overall Indian financial system so that you will understand. Of course, you would have studied this in your graduation. You would have this subject already you would have studied. But still, I would like to explain to you in a different way to make understand about this market. The Indian financial system that you can divide the market into basically two type of market. One is the money market, another is the capital market. Money market means you all know that which deals by commercial bank, financial institution, forex market, and primary market. This is basically a short-term and long-term debt-based fund resources. The money market is basically dealt by debt-oriented financial instruments. I want to be very clear in my word. I am not telling because there are hundreds of financial instruments, so that I commonly make it as a debt-oriented financial instrument, which is dealt in the money market. The money market is regulated by the Reserve Bank of India. So any market needs to be regulated, otherwise it will be unhealthy, it will be high volatile, maybe transparency may not be there. There are so many things which need to be regulated. So I'll come to specifically into the capital market today. Our topic is more of how to make money and how to learn, understand the capital market. So again, capital market, we can divide into two kind of a structure. One is an equity market, another is a debt market. I know that most of you know all these things. Still, I want to brief you before I take next level of understanding of this market. Again, in equity market, you can divide into primary market and the secondary market and also a derivative market. The debt market mostly dealt by fixed income securities like a bank deposit, government bonds, debentures, commercial papers, and hybrid instruments. And today we are inventing many kind of combination of debt instrument depending upon the needs of either the supplier of the money or the investors of the money. So that depending on suitable, we try always, that these are all the instrument is not a born instrument, and we invent those instruments. We structure those instruments depending on the buyer as well as the seller's requirement, or otherwise the borrowers and the investors, or otherwise corporates and the money savers. This is how we do that. Sorry. I know that you know mostly that what is the role of capital market. The capital markets is the indicator of inherent health of the economy. What do you mean by that, friends? See, now you want to understand the Indian economy or any country's economy for that purpose. How the economy is doing well. Whether Indian economy is doing well or not. Is it doing very good or is doing bad or is doing fair, or how the economy is doing? As a student of corporate secretary, we need to understand how the economic things are happening in the country so that we can structure our work also accordingly. So when you look at the market, instead of going through all micro, macro details of the economy, of statistics, just look at the capital market, then you will understand the economy is doing well or not. I don't know how many of you watching the stock market indices every day, either casually or regularly. And I know that you know that there are two stock exchanges in the country. That one is a Bombay Stock Exchange, another is the National Stock Exchange. Both exchanges have got an online trading screen, and the market functions from 9:15 to 3:30 every day. Whereas the commodity market function almost from morning 9 o'clock to 12 midnight because it matches the world markets. So this is how the market is functioning. Just to understand that probably actually I told that this meeting may be held during the market time, either between 9:30 to 3:30, so that you can see that the screen how the markets are fluctuating and are done on the during the market hours. Of course, we can do on some other day during the live time how the market is working. And then one more point I would like to, how an indicator, what is the indicator? I hope that you heard about the word called Sensex. Sensex is an index followed by Bombay Stock Exchange. Nifty is the index named by National Stock Exchange. What is that Sensex and index? What is the index called Sensex? I hope that the word index is a common terminology. What do you mean by an index? Index is nothing but a change measuring the change of set of value over a period of time. A index is a number, it's a mere number which measures of what? Measures of the changing unit of certain value over a period of time. Here, what we call it as a stock, that is shares. The Bombay Stock Exchange monitors the fluctuating value, changes in the value of the stocks over a period of, it may be 1 minute, it may be 2 minutes, or throughout the day. It monitors, gives you consolidated number called an index. Once you look at the Sensex, probably those who are watching in the news, in the TV, maybe that last day that there will be the Sensex have fallen today or Sensex have risen today. Like that, you would have daily maybe hearing or seeing the news. So that when you look at the Sensex, you will understand the market is falling or rising. That means when the markets are continuously falling, that means our economy is not doing well. So it is reflecting, the economy performance is reflecting in the capital market. Suppose it's going up bullish, the Sensex are going 40,000, 42,000, 30,000, 35,000. When the Sensex are moving up, when it is a bullish trend, that means the most of the corporates are doing very well. Ultimately, the price of each company, which are reflecting in the market, gives a consolidated figure. So when you look at the indicator, that is the indicator I'm mentioning here. So you understand the health of the economy. And also when you look at the market, capital market, you know that how much money can be sourced from this market. It is the largest source of the funds with a long-term, or I can say that indefinite maturity for a company. As a student of corporate secretary, you know that what is the structure of the capital. When you know equity capital, that means it is a owner's contribution. It's a owner's fund. It does not have a maturity. It is indefinite. It's not a debt instrument only have a life. Debt instrument have a maturity period. Before that, and also it carries a certain terms and conditions. Whereas the equity market is an indefinite source of funds for the corporate. And for the investor, this is a very source of investment. That is what we are going to discuss today. Why should I invest in this market? What kind of money I can make it? How I will make it? That's what we are going to look at. And this is the market where channelizing the every savings from the investor to the needy people, they are the corporates who raise the funds. This market is regulated by the stock exchanges, SEBI, and I hope that you know who is SEBI, Securities and Exchange Board of India, who is the regulator for the capital market. It regulates the market as well as the stock exchange. When you say the equity share, friends, why I am telling all these things? When you want to earn money from this market, you need to understand what kind of instrument you are trading or you are investing. We need to understand the risk of investment. I hope that most of you know that the fundamental principle of investment. Without investment, we cannot make money. It's a service industry, that is a different. When you want to make money, that there is a definitely you need to understand the art of investment. When you want to learn art of investment, you know the 3 golden principles of investment logic. What is that? One is that you have to look at safety. Another is that you have to look at liquidity. And third factor is the return. If these 3 criteria does not apply to any instrument, then you should not invest in that. If there is no safety, no question of investment. If there is no liquidity, we should not invest. If there is no return, we should not invest. So these are all three fundamental areas we should look at it. Now, this is the capital market where we are trying to earn money. Then we need to understand the capital market instruments. Which instrument we are investing, what is the characteristics of those instruments, how it fluctuates, is it a risky or it is a risk-free, what kind of return I will get it, what kind of liquidity it will have. This is what fundamentally I am trying to take you. The equity shares, I know that most of you know that it is a unit of owner's capital. You can again divide into an ordinary shares and preference shares. And again, when you come to a debt securities, you can have a government securities, debentures, bonds, and commercial paper, so on, which are the debt instrument basically different from equity-oriented instruments. Okay, now I'll come that how you will make money in this market, stock market. When you do investment in the capital market, you get basically the dividend. How the dividend will come? When the corporates makes profit, if the board declares the dividend based on the profit availability for a distribution, then each shareholder will get dividend is the one of the standard income if you invest in a capital market. I am underlining again, if the corporate earns profit, even if it earns profits, the board of directors are ready to declare the dividend. That means sharing the profit to the shareholders. So that is the normal way of dividend income when you invest in a capital market. That's one source of income when you do the investment. The second way of investment, how you learn in the capital market is that there's a bonus. What do you mean by that bonus? It's not a cash bonus, it's a share bonus. When the company earns sufficient profit, when the results have been accumulated over a period of time, if there is a large resources are accumulated, in order to capitalize and reward the investor, the company may offer us a 1:1 or a 2:1 equal number of shares or certain portion of percentage of shares to the investor, shareholders, free. Thereby, your number of shares who are invested in the capital market to be doubled or tripled, or it go on depending on how many number of bonus each year or so many years the corporates are declaring. That is the way of you will get bonus as one of the way of earning from the capital market. See, I'm just explaining the market, the nature of income. Then I'm going to take you to learn the risk and how to make money. That will be my later part of my explanation. The another way the investor in the capital market rewarded by way of rights issue. What do you mean by that rights issue? When the corporate goes for expansion or my kind of fundraising further to the initial public offer, that is called follow-on offer issue. Thereby, the existing shareholders compare to the current market price, and they may be given a right issue at a cheaper prices. If you are
corporate benefits.
2 days back, you would have noticed the news analysis that Mahindra and Mahindra Finance, even though the share is 100 and the current market price is 145 rupees, they are offering the rights issue at a rate of 50 rupees to the existing shareholders. Imagine, friends, the particular share price in the market, current market price is 145 rupees. Whereas the corporate issued to the existing shareholders, in order to give them a reward, they are issuing at a price of 50 rupees. That means straight away, you are getting almost 100 rupees, 90 to 100 rupees. You are getting subsidized the price of the particular existing company. You get so much in income, you will make money in this market. You get, my friends? I hope that you understand that. The rights issue is nothing but the corporate issuing a shares to the existing shareholders. At what price? The price may be differ from company to company, but a comparatively discount to the existing market price. What do you mean by existing market price? Again, I am going back to a little bit on the basic of the issuance of the shares. See, when the corporate issue the shares to the shareholder, why they issue the shares? That is how they raise money from the market. They come through that called a primary market process, through which they issue the shares to the public subject to certain regulations. I am not going into those areas, but you need to understand that is what the learning process of the market. You need to learn the market. What is the primary market? The primary market is through which each corporate first time issue the shares to the general public or investor, whoever wanted to apply. When they issue the shares, see, I'm explaining all these things, assuming that you have a basic understanding about what is a share, certain terminology like a face value, certain terminology like that premium or at a discount. All these things I will explain also whenever required while I'm explaining these things. When a corporate doing a project, normally the promoter contributes some amount of money by way of share capital. For additional amount required, they may approach a financial institution to raise the money by way of loan or a debt instrument. Still, they need to have a large amount of capital. They approach the public to raise money by issuing by way of shares or a debenture or any other instrument which are suitable to the respective structure of the capital. So when they issue the shares, the corporate may issue at the face value. That means face value may be 1 rupee, maybe a 2 rupee, maybe a 5 rupees, or maybe a 10 rupees, or maybe 100 rupees. Whatever that is called face value means just at par. The at par means what? As it is the exact value. When the company already in existence, they have a huge profit, their net worth is more than the face value of 10 rupees, then they may decide to issue the shares at a called a premium. What do you mean by that? The 10 rupees face value, the company may issue at a 40 rupees extra. That means the total value of the share is 50 rupees. That means the company charging 40 rupees as a premium because the company's net worth is more. So when the share is issued at a 50 rupees, that means your investment value is 50 rupees. The shares will get listed in the stock exchanges. That is what I will explain to you, the learning of capital market. When they issue the shares, they have to list because the stock exchange is an institution which provides the liquidity of the particular instrument. What do you mean by that? Liquidity means as an investor, I can exit anytime or I can enter anytime. Whenever I want to, I can sell the share and realize my money. If there is no listing with the stock exchanges, then it is very difficult to, what is that, exit from the particular share. As a student of corporate secretaryship, I'll ask you one question. Okay, the company issue the shares. If the company earns profit, they may declare a dividend. Or if the company incurring a loss, they will not do any dividend. The market price of the share also, it may fall into from the issue price, like 50 rupees share price may be quoting at 20 rupees, 30 rupees. In case you want to exit, I'll ask you one question, you can answer me later that whether the shareholder approach the company, sir, I have got a share of 1,000 shares from your company. Now I don't like to hold your shares. Come on, I'll surrender you. Please take back the share and give me money. Whether the company can do that? Reserve the questions. Then you answer me later. Okay. So when the company issue the shares, it is a mandatory for a public limited company to get it listed with the stock exchanges. What do you mean by listing? Listing is nothing but making an agreement with the stock exchange by the issuer. Issuer means corporate. These shares I have issued to the public. These shares are recognized as a negotiable instrument. That means, what do you mean by negotiable instrument? Negotiable instrument is a tradable instrument. That means transferable from one person to another. The ownership of the instrument. I am the owner of the share. I can transfer my ownership to somebody else. For example, if you have a house, you can sell that house. That means your ownership transferring from you to somebody else. That is called transfer. You are conveying the rights to somebody else. So that liquidity is facilitated by the stock exchange. I explained when I explained to the stock exchange. So the another income, what you get it called a capital appreciation. What do you mean by that? This is the major area we can make more money in the market. The capital appreciation may be there, sometimes there may be a capital depreciation. I will explain what is risk involved. What do you mean by capital appreciation? When the company makes more profit, whether the net worth of the company goes up, naturally the instrument, the share price also go up in the market. So that prices of issue of 50 rupees share when the company have been issued may be quoting at 100 rupees, 200 rupees or 500 rupees, 220,000 rupees or more. It depends on the performance of the company. The share price appreciate in the market, that is called a capital appreciation, quoted in the market. Through that price only is become purchase and selling happening. So these are all the corporate benefits, because you can ask me one question that why I'm explaining this. Sir, when I go invest money in a fixed deposit in a bank, I will get an interest. When I go and do a business, I'll get a profit from my business. Why should I invest in a capital market? What kind of return I will get it? What kind of earning I will make it? So these are all the common, you get dividend, you get bonus, you get rights issue subsidized, and you get a capital appreciation. But is it guaranteed return? Is it a guaranteed return? That is what you need to do things. So when I just touch, you need to understand a little bit how the capital market functions. That is what I am explaining now. And what is the structure of the capital market? You divide into a primary market. Primary market is through which any company, that is called the initial public offer, they issue the shares to the public. Whoever interested, they can apply through the particular process and get the shares. And follow on public offer, further public offer is called a rights issue. Sometimes the company may offer it a private placement. That means without going through the SEBI formalities, still there is a privately the company may issue the shares either to individual or through the qualified institutional placement. So these are all the method by which the corporate raises the money, and thereby investor can invest in this instrument after careful studying the risk involved in the market. So this is just, I'm briefing, I'm not going much deep into that because everything requires a large kind of explanation, because when we want to learn this, we have to understand what is the primary market. Who are all in this primary market? Who are all the intermediaries working in this market? You call person called a merchant banker, you have a lead manager, you have registered transfer agent, underwriters, broker, institutions, investor. These are all the people who are involved in the primary market. The primary market is through which the corporate is raising the money. So basically the corporates require a person called lead manager and merchant banker. They are the certified people by the SEBI who are authorized to carry out this particular job. The functions of the merchant banker is that sit with the corporate, understand their financial requirement projects, and make a detailed prospectus which are readable to the investing public, wherein the details of the promoter, details of the project, what is the risk involved in the project, and what is the past performance, what is projected for the future performance. All these things, they prepare a report called a prospectus, which they again went with the SEBI, with the subject to approval from SEBI. They publish to the newspaper and open to the public to subscribe the shares. That is the primary function of the merchant banker, and the registrar and transfer agent is the person who always documenting all this process and maintain the folios, who are all subscribed the issue, how the shares are allotted, who are all my shareholders, who takes transfer, who buys, sells, everything. That is the function of the primarily the registrars. And the underwriters is the person, it's nothing but an insurance of the company. That's what, in case whatever the amount I projected to raise, for example, I wanted to raise 500 crore from the public issue. If 90% of the proposed amount, if I don't relieve it, then I'll have to return the entire proceeds of the public. That means I am facing the risk in case if 90% is not subscribed. So as a corporate, as an issuer, what I do that to avoid such kind of an embarrassment, I go to the underwriters, they insure my issue. What do you mean by that? In case if there is an undersubscription, The insurer, the underwriter undertakes, that is the reason they are called underwriters. I underwrite to subscribe the unsubscribed portions. So I make the end-to-end tie-up of the issue. Ultimately, the brokers and institutions do market and take the issue to the general public and done by the investor. This is a primarily on the primary market side. I'm not going to the entry norms, how these are this, that these things. So normally what you have that you need to have a retail individual categories of investor called retail individual investor and non-institutional investor and qualified institutional buyers. These are all the category. For example, you are an individual, when you invest in this market, then you are called as a retail individual investor. Then there is a institutional investor. Who are all institutional investor? And maybe a financial institution, maybe a bank, any institution which handles large finance and have a large portfolios in the market, they are called institutional investor. Today you have a qualified institution, means those who are investing particular amount and above, they are called qualified institutional investor and also a corporate. We have to add one more is that foreign institutional investor. That means that the institution which are located in other than India, they are also invested in this market and they do investment in this market. They are called foreign institutional investor and also foreign portfolio investor. So you have various kind of investor, categories of investor in this market, so that when you do business in the market, you need to understand who are all the players are there in the market, how they do that. Now I will come to basic of certain things. When you want to do business or earn money from the capital market, you should fulfill certain basic conditions. What is that? You have to fulfill your KYC norms. What do you mean by that? Know your client. Today, anywhere you go to a bank, you go to insurance, you go anywhere, you are supposed to fulfill KYC norms. That means, who are you? What is your identity? What is your bank account? What is your PAN card? Your photograph, your Aadhaar card? All these things you are supposed to produce. And based on that only, you will be given, every investor will be given a code. You are called as a client code. If you want to do the business through the capital market, earn money from the capital market, there are two things. First, I am going through the basic criteria first to enter in the market. Then what are the risks associated with the market? Then how to eliminate these risks, make money in the market. So we have a three portions I am dividing from this level. To become part of the investor in the capital market, you need to open a trading and demat account with any of the broker or any of the member of the exchange. I put it that all called a broker. Maybe it may be a State Bank of India, it may be a Kotak Bank, it may be a Karvy Securities, it may be Chola Securities, it may be Annamalai Securities, it may be any companies. They are all members of the stock exchange. They are all registered with the members of stock exchange as well as recognized and registered by the Securities and Exchange Board of India. Basically, you have to go through the stock exchange. You have to make your application to become member of the stock exchange. When the stock exchange satisfy the conditions prescribed for the membership, then they process, scrutinize, and send approval to the regulator of SEBI to register you as an investor. You get my point, friends? So that is the basic requirement. Anyone who want to enter into the capital market, then only you can make money. First, you have to enter into the capital market. This is a basic. So you open an account called a trading account. Then there is a one more account called you need to open with a demat account. That is called dematerialization. What do you mean by that, friends? For example, you want to deposit your money or you want to deal through the digital transaction, make payment by check or anything. Normally, what do you do that? You go to a bank, you open your account. The bank also does KYC for you. Then what they do, today they give you universal bank accounting number. Few years ago, there will be, you are attached to a particular branch. Other than that particular branch, you cannot do any business. Today it become universal banking. So the bank gives you universal account code, maybe your savings bank account. There also again you have a different kind of an account, and wherein that you do that, you have a SB account, you have a current account. You may be an individual account, you may have a corporate account. You may be a resident account, you may be a non-resident account. What do you mean by that? Resident means people who are in India, residing in India can open a bank account. Those who are living in abroad also can open a bank account. That's called NRO account, non-resident ordinary account. There also again you have got two kind of an account, NRE account, NRO account. Even NRE again you have a two kind of an account called NRE INR account, NRE FCNR account, foreign currency account. So like that, when you keep your currency, cash, do the transaction, then you go through the banking transaction, you open a bank account. Similar to that, just exactly similar to that, when you want to deal in a financial market, I am using a word, not only the capital market, it's a financial market. All financial instrument today, you can deal through in a dematerialized or otherwise a digital form. That is called electronic instrument. You don't not have a paper as a share certificate. These share certificates have been digitalized, given in an electronic form to you. That account called maintained by the depositories. You have two depositories in this country. One is the National Depository and the other is the Central Depository. The depository is nothing but an organization. It is an institution. The primary function to maintain all your financial assets in dematerial form. They are the custodians. That is called depositories because you deposit your paper with them. So they become a depository. They manage your instrument. That is a mandate today. So if you want to do these two things, if you want to open a trading account, you want to demat account, without that you cannot do any business in the share market. Primarily you need to understand. That is the learning. Number two is that if you want to do this, you must have a PAN card. PAN cards become a sole identity for identifying you as an investor in this market. So you need to have a bank account, you need to have a PAN account, you need to have an Aadhaar so that the Aadhaar and the bank can be linked. So you are identified, even you do with many of the brokers. For example, you have a Kotak Bank account, you have an Adamai Capital account, you have another company account, you have Motilal Oswal, Sharekhan. Wherever you go account, ultimately you will be identified through your PAN card, which are mapped with the stock exchanges. So they will easily identify who is doing what. So this is the basic you have to do that basically. And basically you need to fulfill to become a investor in the capital market. You understand, friends? So this is the basic criteria. If you want to do business through the capital market, you need to fulfill your KYC, either as an individual or as a corporate. Then you can open a trading account as well as a demat account, which is the mandatory, without which you cannot do anything. That's one. Now let me come back to another spot, how you can do that investment and what are the risks involved in this market. What is the avenues are available, and that is how you need to understand. So once the initial paper have been issued, these papers, either debt instrument or an equity instrument, which are listed with the stock exchange. Okay, now let us understand what is the stock exchange. Stock exchange is a self-regulatory body which are regulated by SEBI. It is a common institution, it's not owned by anybody else, which facilitates the buyer and seller to do their transaction on their floor of the exchange or otherwise on their platform, which is digitally today is developed. Today we have a two largest exchange for the equity. Of course, there is a commodity exchange. BSE and NSE, both are different exchange. Both are offering a platform wherein the issuer, the shares who are issued, the corporate have agreement with them. These are all the shares are listed with you. Please allow them to trade. Their job is over after that. Now stock exchange is open. Now they admit the members They are called the brokers. These brokers are eligible to participate in their trading. Other than the brokers, they cannot directly access to the capital market. Whatever you do through online trading or a mobile-based trading or ops-based trading, all these things goes via to whom they give the link, because the member who gives you the link, ultimately it goes through their terminal and to the stock exchange to buy and sell the shares. So stock exchange takes care of the exchange of shares through buying and selling mechanism and settles the payment for the sellers and collect the payout from the buyers. So the buying and selling taking place. I'll explain to you how that takes place. So the people who are in the market is called a stockbroker and also sub-broker. And if you want to become a stockbroker or a sub-broker, there is a capital adequacy norms is there. What do you mean by that? Today, if you want to do any financial kind of business with a recognized, with a regulated body, you need to have minimum so much of capital. That is called a capital adequacy norms. Today, even if you want to start an NBFC, that is a non-banking finance company, or you want to start a bank, or you want to start any other financial business, asset management company, or you want asset reconstruction company, or anything you want to do, that there should be a minimum prescribed capital for each and every category of the business what you are going to do. You get my points, please? I hope that you get it. And so that capital adequacy, because anybody cannot start the business without capital. So you have a guy in the secondary market, in the stock exchange, they also do that wholesale debt market segment, the capital market segment, and futures option segment. These are all the three segments they have. That means even in the screen of the trading, you have a different category, because capital market segment is one segment, the debt market is another segment, then derivative markets. I hope that you know the word called derivatives. It's called futures and options, swaptions. It's a very big field, because these are all a leveraged business. These are all the segments are available in the stock market where you can do that. So what do you do that when you do business, the intermediation broking firm, you need to have an agreement as the client. When you do the KYC, there is an agreement involved in that. And thereby you enter into an agreement with maybe a tri-party agreement or a bi-party agreement, that because it's again a contract. I hope that as a student of corporate secretary, you would have studied the Indian Contract Act. Whatever you do, that when you do a contract is nothing but an agreement between the parties. And there is a consideration, there is a terms. So these are all the basic things you are supposed to understand when you do in the market. Again, I am giving you a preliminary learning process of the market to understand the market. Again, each one have a depth explanation you require to understand better. When you do business in the market, you are required to pay margins. Now I'll come back to the practical side of the market and the risk involved. Then only you know how to make money. Suppose you want to play a football, you need to understand the basic rule of the game of football. What are the positions involved? How you have to move it? How you kind of transfer the ball from one person to another? How to goal? Same way, volleyball or a tennis or a cricket or anything, any game, it has got a rule of the game, which you need to understand. Then only you can be a successful player. You can get victory. Same way, if you want to be successful money earning from the capital market, you need to understand the rule of the game in the stock market. And what is the risk? Basically, you need to understand what is the risk of the market. So when you have the risk, normally there is a safety aspect comes into the picture. What is safety? When you want to buy or when you want to sell, the asset value of which you want to buy or sell may likely to fluctuate. When likely to fluctuate, you should not go away from your obligation. So that is the reason when you become, for example, I am a broker, you are an investor, you become my client, you want to do business in the market. That means you are entering an agreement with me. I act as your principal or as your agent. You are my principal. I am your agent. I act on your behalf. That means I am carrying out your instruction. I am a only intermediary. I hope that friends, am I making very simple as possible to make you to understand about the trading involvement in the market. First part I explained to you, you have to become my client by fulfilling your KYC norms. Now over. Number two, if you want to start the business, you have to be margin, you have to enter into a client agreement. That is nothing but an agreement between you. That means you become my principal, you gives instruction. I carry out as your agent. I am not, there is a lot of difference between as I do my business or as I do business for you. That means I am your agent. My responsibility to carry out your instruction to buy or sell as per your terms and conditions. This is what my job, for which I charge you brokerage. Otherwise, I am not responsible for the profit or loss during your trade. You understand, friends? So then naturally, if you don't agree or if you don't fulfill your contractual obligations, that means I have the risk because I am executing your trade with the stock exchanges. In case tomorrow you get away, you run away, you are not accessible. Who is the bearing for the loss or profit or consequence to your transaction? So I normally collect the margins from you. For example, I give you another way of example to understand you better. When you go to a bank to get a housing loan or a vehicle loan or any other loan, what normally they do that, okay, what is the loan amount? Okay, 1 lakh rupees or a 10 lakh rupees. Okay, how much you will invest? That is called a margin. What they say that, okay, you invest 30%, 30,000 rupees you invest now. I will give you 70,000 rupees loan. So you can buy 1 lakh so that I am well secured. I take risk of only 70% of the value of the particular product, not the 100%. You get my point, friends? So this 30% or a 10% or a 5%, whatever the money you are paying in advance, that is called a margin. Why it required, friends? I now come to the risky side of the market. See, when you want to deal in a capital market, please understand that not only the capital, but generally in a market, the price of a particular asset class is not fixed. It may vary depending upon your economic and other conditions. Even you do a real estate. Now, even you do gold, except a debt instrument. For example, fixed deposit, when you go deposit in a fixed deposit, 10,000 rupees, if you are depositing, the principal of 10,000 rupees is more safe, unless otherwise the risk is the bank is vanished or dissolved, like a moratorium declared by Yes Bank a few months ago. That also there is only a moratorium, and but still the bank is there, still your money is there, even though you are unable to withdraw your money. I hope that you understand. So when you go to a debt instrument, your principal is more safe. You get a return on particular investment. You get my point, friends? So when you come to a capital market, the price of a share is not a static. It is more of dynamic. It fluctuates every now and then. That means, for example, now I tell you, you know the company called Infosys, Wipro, Tata Motor, Ashok Leyland. There are 6,000 companies are listed in the BSE. These company shares are traded in the market. Okay, now you're all now learning the market and you want to enter into the market, you want to do business. Okay, tomorrow the students you are coming, sir, we are all interested, sir, come on, we will do something, we will want to do some business in the capital market because you told me we can make tons of money in this market. Every one of us want to have money. Come on, we will do. Okay, all will do that. We sit in the classroom that we are all completing your KYC norms. The similar things we have done in Pondicherry University. Pondicherry University for the MBA students, all students are compulsorily how to open a trading and demat account. And each one is given certain kind of money in the account. So they have to compulsorily do the trading and learn the process of trading and give you a report. That is a one semester. It is a compulsory for every MBA student in Pondicherry University, especially the MBA banking technology. We have done for 60 students. In one semester, they have to do their own. Each one will be given a mobile apps through which they have to be give you a simulated version. Through simulated version, they are giving each one a credit of so much money. They take as a margin, they try to do trading, they invest, and how much money they make, how much loss they make. At the end of the semester, they have to submit a report through the Viva. Okay, this is for even probably I can tell the management of your college, and probably you can try this so that you have, because the learning is, that certain kind of learning you cannot do by just reading the books. Of course, reading the books gives you theoretical experience. But if you want to you need to have a practical experience. I always tell everybody that theoretical experience knows only why, but you cannot do how. I know how to manufacture a chair. I can read the books. But unless I try in the wood to manufacture the chair, I cannot do that kind of a furniture. I should do practically, then only I can learn. So if I want to be a furniture manufacturer, I should know why and how. That means theory plus practice. So now let us assume that all of you come to the practical class. Now we have done the KYC. Now everybody is interested to buy and sell the shares and to make money, because without buying and selling, we cannot make money. Sir, now what I should do? There are 6,000 companies. Now we need to understand it is not a product like you buy a vegetables, you buy a steel, or you buy a cotton, you buy a gold. Even gold today, I hope that I don't know how many of you are aware that it's crossed 5,000 rupees today per gram. Last 3 days, the gold price have jumped like anything. If someone have invested in the last March of 2019 in a gold, either a 1 gram or a 10 gram or a 1 kilo of gold, today you would have got 67% return in 1 year time. That is a fantastic opportunity gold market has given to any investor in the world, not only in India. Last few days, it has given a fantastic return in a gold market. How to do business in gold? Can I go to a jewelry shop? What I mean, gold means it's not a jeweler. Okay, jewelry is a 22 karat ornamental jewels, which I am not talking about. It's a 24 karat, 99.5% purity of the gold. You can buy, you can sell anytime, just like that, sitting on your mobile. That is an opportunity today available in the market. You can enroll, become NSE or a BSE or MCX commodity exchange, wherein you can invest in a gold. You can invest in a silver. You can trade in crude oil. Even you do not know what is crude oil, how it look like. Still you can do. You can do platinum. You can do business in cotton. It's called, you can do agricultural product. So that kind of an opportunity today available through the stock exchanges. That is the reason I want you to, this session is mainly the principal and your faculties given today. The session is first learn the capital market and how to earn from the capital market. That is the main purpose of your management have done for you. Friends, students, friends, I really tell you that you have to thankful to your management to bring such a practical subject to you, so that every one of you have become an expert and to earn money. There is, see, everybody thinking earning money is a conventional way. It's like a fixed deposit or doing business or doing money lending, these, that, everything. But there are plenty of opportunities available in the capital market. It's a very big subject, friends. Sorry, I don't have much time to explain each and everything, but still I try to highlight that certain area. Even I hope that you don't mind even extending for another 10 to 15 minutes. And so that you need to understand the risk of capital market. The price of the shares may fluctuate according to the performance of the company, according to demand and supply, according to various economic geopolitical situations happening in the country as well as outside the country. There are a lot of factors which are responsible for fluctuation of the price. So while fluctuating means it may be a downward, it may be upside or upper side or a downside. So normally we call this called bearish trend and bullish trend. This is a terminology you are supposed to know. And bearish means the market falls and market going down, and bullish means market, the price of the shares are going up. There are various factors. It's not a particular factor responsible for that. And that is what the learning you should do that. We call that there is a fundamental factors, fundamental analysis and a technical analysis, which are responsible for fluctuation of the price movement in the market. The market time is 9:15 to 3:30 every day. And thereby all the listed company shares are traded in the market. And there are a lot of news driving the price, as well as the demand and supply factor. If there is more buyers, the price may be going up. If there are more sellers, the price is fall. That is a general economic law, depending on the demand and supply. First, we need to understand the risk. What is the risk? Here, I am not guaranteeing that your principal is in safe. That is what we need to understand. Whereas when you go to the fixed deposit or any other debt instrument, your principal is intact. நீங்க என்ன முதலீடு போடுறீங்களோ அந்த முதலீடு சேஃபா. Whereas in the capital market, sometimes your principal may get eroded. Take the case of an Yes Bank. There are a lot of investors who are invested in Yes Bank at 200 rupees, at 100 rupees, at 60 rupees, at 40 rupees. Today, you know that it is 13 to 14 rupees. That means if you have invested at a price of 100 rupees, now your investment value itself is around 15,000 instead of 1 lakh rupees if you have invested in the bank shares. Your 85,000 rupees, your investment is already gone. You have incurred a loss. That is the major risk you need to understand in this market before you venture into this. Sir, what is this? You can make tons of money, you can earn money in the subject you are teaching us. Now what you are telling, you lose the principle. Why should I do that kind of an investment in this market? Now, panam pandradilla in the market ku vandirukren. Panam lose pandradhukku na yen sir unga class attend pananum, na yen idella seiyanum. Is it right? Right or wrong? I hope that this question should arise in your mind. That then when I lose money, that is the risk of this market. That is a one side of the market. I know that most of you know that Infosys, even Reliance Industries. Reliance Industries last the same month, March last year, it was 1,100 rupees, the share price in the market. Today, it is 2,100 rupees in this market. That means your investment of 1,100 have been doubled in a period of 12 months. Can you get any investment 100% appreciation over 12 months? You cannot. Any business you do, getting double the money in 1 year time. Friends, I tell you, money making is not a small affair. Money making is a toughest job. Managing the money is a toughest job. I just tell you that. I hope that all the students, please take it granted that I am going to give you 100 crore, each one of you. Today, after the session is over, I am going to credit 100 crore to you. Somebody wants by cash, I will give you by cash. Somebody wants by check, I will give by check to your bank account. Then tell you that you return this money. Today is July 24th. By August 24th, you give me 5% appreciation. That means 1 crore if I give you today, by end of this next month, you should give me back then 1 crore 5 lakh rupees. More than that, whatever you are earning, it is yours. You keep it with you. I will not ask you. How many of you ready? Ready? Yes, I will give you after the session. I am telling you, night you will not sleep. I am telling you my practically. No one will sleep night. This 1 crore, once you cash, you carry your home night. When you go, there's 100 crore, you keep it in your bedroom or hall. Throughout the night, you will not get sleep at all. Then tomorrow, once your mind started working that where to invest this money, how much I can make money for me and give Annamalai 5 lakh rupees. Can I make that? Where to do that? I'm telling you, it's a toughest job managing the money. I'm challenging you. And any of you after your graduation interested to become an apprentice, to make money, to become a wealth manager, mutual fund manager, we will give you an opportunity. You are welcome. No problem. Okay, I'll come back to that. Now, there is a chance of your price of investment may appreciate, may depreciate. That is the biggest risk before you do the business in this market. That is what the risk you need to understand. Then what you have to do? That is the learning, capital market learning, that there are 6,000 companies. Which company I can invest? Then you need to study that company. Not only the company, first before that, which sector is doing well? There are a lot of sectors. See, pharma sector is there, IT sector is there, then is there cement sector is there, hospital sector is there, air aviation is there. There are steel, cement, cotton, spinning mills, garments, so many variety of industries there. So if you want to choose a particular sector which are doing, unless you understand the which sector, especially the post-COVID-19, in the current scenario, it's not going to be the same period to COVID-19. I'm telling you, friends, the COVID-19 have changed the world dynamically, drastically, in so many ways. In socio, in geographical, economical, personal relationship, family relationship. So many things have drastically changed in the last few months from March onwards. Same way, the corporates also undergoing a lot of changes because of COVID-19. See, for example, now this is the time normally, you know, that we used to sit in your college classroom. We have a direct interaction. I can see you, you can see me. So there will be a better the way of explaining. When we have a personal teaching, there can be better reaction than doing by electronically. But situation changed. COVID-19 have changed you. You are sitting in Chennai, I'm sitting in Coimbatore. Still we interact each other. This is a technology. The COVID-19 brought lot of industries are going to die. The no more the prosperous industry of pre-COVID-19 are not going to be prosperous again post-COVID-19. So if you want to be successful in the market, make money from this market, you need to first now study that you need to learn that which sector is going to do very well in the post-COVID situation. Then I have to analyze the sectoral performance. Cement will do well, or infrastructure do well, or say this steel will do well, or a cotton, or a personal consumption like a Britannia, or like a consumer category, consumption category, or a bank stock, or a finance stock, so many things. So I have a separate session I will take you that how do I do this sectoral wise. That is called, normally we do that, it's called a fundamental analysis. Fundamental analysis give you the financial strength, whether the company is making profit or a loss, what is there going to be next quarter result. Quarter means not anything else. Quarter means period of 3 months. I hope that. See, 3 months result, every corporate is supposed to publish. Tomorrow you are, most of you may become a company secretary after completing the corporate secretaryship. So your job is to do the compliances, that you have to publish the company's performance every 3 months to the public, so that investor will do necessary analysis. And so, friends, you have to study the sector. Then out of the sector, for example, you take a cement industry. Now again, cement industry is an industry wherein there are a lot of companies like India Cement is there, ACC is there, Gujarat Ambuja is there, like the Coromandel is there. There are a lot of companies which are in the particular sector, which again doing well. So I have to first learn to do this. So that, friends, so we need to understand the financial intricacies of each company. That is called a fundamental analysis. And then what do you do that? Okay, once having selected the company, okay, I decided to do India Cement. Friends, please note down today that, for example, India Cement. Go back and please study what this company is doing. What is their balance sheet? How much profit they are making? Are they losing? Are they competitive? how much their capacity, how much the peers are doing. This is a friend, I am telling you, really telling you, if you once enter into capital market, it's a vast field. You can learn a lot of things. You can become highly competitive. You will undergo the tremendous experience of so many things. It's a very big field, highly interesting, I'm telling you. 40 years I am in this field. I am learning every day. I am learning because this no retirement. Lifelong. You can learn that. Okay. Now, okay, having selected India Cements, understanding the current price is 130 rupees, but then people say that this, if you buy this stock today, then you will, the share price will go to 200 rupees in a span of 6 months, 3 months. How to do that? How to understand, how to predict the price movement? The price movement you understand by doing the technical analysis. So to understand the strength of the company, you do a fundamental analysis. Thereby you will understand, can I buy this stock? Okay, I identify India Cement as a stock I can invest, right? Can I buy at this level? When to buy? Then I do this kind of a technical analysis, nothing but a charting. What do you mean by charting? I go back to the past performance of the company, price. I take the past price, last 5 years or 1 year, 2 year. I make it a charting. Then based on the past performance, past data available with me, I take it to the next future level. I try to predict. Based on that, I try to make it things. You get my point, friends. I hope that I am exceeding the time. And sorry, I'll try to compress because very subject, quite interesting. So when you want to make money, you should learn the capital market, that doing KYC norms, the understanding the risk involved in the capital market. What is the risk? There may be a capital depreciation or capital appreciation, but still I may get dividend, I may get a bonus, I may get a rights issue, I may get an appreciation. If there is no depreciation, I'll make more money. Thereby I can make more money. That's but I need to then how I will do that. So then again there is a listing process that what I should be. I just explain to you that 1 minute. So I'm just rushing through because no time that then again, when you want to do the business in the capital market, I have broadly explained to you what is the risk available. Now come to the earning part, that you have to decide. There are a lot of opportunities available in the capital market. What is that? You can do an investment. That means you just invest, wait for a few months. Or a trader. Trader means day to day, the fluctuation, you take advantages, that there people will call it as a speculation. I also tell you by this friend, when you go to today out of this session, that when you tell few people that I am going to do business in capital market, stock market, right? There is a general presumption that stock market means it's a gambling. It is a speculation. People will lose money. So far, my experience, nobody have gained money. Enna sir idu? ஒரு சைடு நீங்க இந்த மார்க்கெட்ல தான் டன்ஸ் ஆஃப் பணம் பண்ணலாம்னு சொல்றீங்க. But people are, when I go outside, a lot of people are telling opinion that they don't go to stock market. பணம் பண்ணிடும், பணம் உள்ள போயிடும், சட்ட பேட்டெல்லாம் அவுத்துட்டு விட்டுருவாங்க. This is how people are telling. I lose lot of money. அப்படின்னு சொல்றாங்க. What to do? I'm getting confused. Friends, I tell you that every business there is a risk. If you want to be successful in any business, even you want to be successful in your examination as a student, as a parent, even the social responsibility, every role you play, you may be a father, you may be a mother, you may be a sister, you may be a brother, you may be a friend. You have a different sociological role in your family life and a social life. If you play that role properly, you will be successful or you will be failed. Many of the friendship become a problem because we don't behave like a friends. We don't follow certainly the basic principles of friendship. We get annoyed, we mistake everything, we misunderstand instead of understanding. So our friendship gets spoiled. Even parents' relationship, son and father, daughter and mother, and even brother to brother, sister to brother. So many things. We don't play the game properly. So because why we don't play? Because we don't understand that everyone role, how to play that. The same way, if you want to play your game in the stock market, if you want to make more money in the stock market, you should understand the first risk in the market. Yes, now I understood the risk. Yes, I may lose money or I may gain. There is a opportunities available. How to avoid loss, how to make money. That is what next you should learn. So you have to identify yourself. Are you an investor or you want to be a trader? If you are an investor, you have a different rule of the game. If you are a trader, you have a different rule of the game. Whatever you do that, friends, discipline is more important. Everywhere. If you do not have a discipline, you cannot be successful. And there should be a clear focus. What you want, what is your goal? I come to this market mainly, I want to make money. My goal நான் பணம் பண்ணணும், பணம் நிறைய சம்பாதிக்கணும். அப்ப என் ஃபோக்கஸ் பணம் சம்பாதிக்கிறதுல மட்டும்தான் இருக்கணும். மோடி என்ன பண்றாரு, எடப்பாடி என்ன பண்றாரு, பக்கத்து வீட்டுக்காரங்க என்ன பண்றாங்க, அந்த ஃப்ரெண்ட் என்ன பண்றாரு. I am not worried about that. So I want to have a clear focus of I want to make money. 1 crore I am going to invest. I will earn 1 crore rupees within a short period of time. This is the period. My investment value, my targeted return, my target period of investment, and my retirement planning, my marriage planning, my children's career, so many things I can have a clear focus. Accordingly, I should do my homework, I should plan, and I should review. This is what more important. So what you have to do, friend, you need to plan your investment. You should know how that works. And first, I tell you, everyone, please understand yourself. I am seriously asking you one question, my dear friends. Do you know about yourself? You need not answer me. You please sit quietly. Think that what kind of personality you are. Do you know what you want it? Do you know what kind of risk appetite you have? Do you know how much money you want to make in your life? Many of them do not know because we are very good know about others than ourselves. We never study about ourselves. We never look inside what kind of person I am. No, we know everybody, our friends, our lecturer, our principal. If I ask you that how you talk about your faculty, you may talk 1 hour. But if I ask you to talk about yourself, you will not be able to even speak 5 minutes, I'm telling you. I'm sure about it. So friends, so you should know yourself before you venture into any business. You need to have a right path, be disciplined, and be willing to learn. Don't go with a closed mind. This is what more important. I think, friends, I have taken more time. Still, I have a lot of things to explain to you. And probably I will discuss with your management and faculties. If there is a chance they give me, I will continue the same topic. We'll give you more in-depth analysis. And I'm sorry I could not, because probably you most of you have to go home or have some other work to do that you would have planned for 1 hour. I really just to conclude the 2 points I have told you that I give you 1 crore rupees today. Please carry that 1 crore rupees. Please don't forget to take that money from me. I'm sure that I will give you. Then tell me tomorrow that how many of you have slept very well. And I have told one more question in the beginning to answer later. Both also, please try to mail me or give your feedback. I really take this opportunity to thank your principal, your faculty ma'am, and everybody in your college, and all the students and all the other participants who are in this webinar for your patience hearing. Thank you so much. And please let me open the session for discussion. Thank you so much. Anything, do you hear me or any, can you unmute your mic and ma'am? Ma'am, are you on the line? Yaar line hai? One hour, thanks sir. Sir, unmute our fire.
Kamali. Okay, okay. Kamali.
Thank you, sir. Now I invite S. Kamali from the Department of Corporate Secretaryship of Mahalakshmi Women's College of Arts and Science for vote of thanks. Kamali, we can't able to hear you.
It's not audible, Kamali.
I think her mic is not working. Yeah, she has to unmute the mic.
Hello. Start, Kamali.
Can you hear me?
Yes, Kamali, we can able to hear you.
Okay, okay. Is it audible, sir?
Yeah, your voice is audible. Yeah.
Yeah, sir. Yeah. sir. First of all, I would like to thank our management and Mr. K. Annamalai sir for organizing such a wonderful webinar for our college. Thank you very much, sir. It's a pleasure to thank you all. Thank you, sir. And I would like to thank the participants also.